So we are seeing the Nifty try and make a recovery. It is doing what it's done the last two times, that is take support on the 20-day average, and it's trying to do that again over here. So if we do close positive, then and hopefully even with a positive candle, it's a good sign that the current pullback in ABC is complete and the next move higher is starting, which is what I'm anticipating. So what we're looking at is the Nifty, which on the daily chart has taken support on the 20-day average for the fourth time. I would say if I include this particular low, but here it was a little away from the average, so we can see a third time. And this is a good trend continuation signal typically when you're trend following. When momentum indicator, once it's given you a buy signal on the RMI when it is whipsawing, and this you can now see on strike, you can use the indicator there. The Rohit trade setup, if anybody's tried to plot that on strike, you will see always this averages and the Bollinger Band there, because this is how we trail. So when there's whipsawing and this cycle is incomplete, we are just extending this trend either on trend lines, trend channels and moving averages. And right now we see 3 times the 20 DMA, which is basically the midpoint of the Bollinger Band, if you plot it, being held as support, and price is extending. So this is how long extended rallies occur, and we continue to trail them. We don't worry beyond that point, that it will fall further till it actually does, or till you can complete counting 5 years, which we are still not able to. So in the process, what we move on to the hourly chart. What we see is that this recent pullback to the averages is essentially a very clean A, B and C, close to the bottom end of the channel, and now we're trying to attempt to start up the next wave from here. Now in that, the hourly RMI did cross over to the buy side today morning in the first tick, 9:30. And after that, we are trying to cross the moving averages here, which are at around 19,700. Once we get past that, then we'll attempt to break the channel line here and then head towards 20,600 or so. That's the setup as we see it right now. I think mostly because the ABC Elliott wave wise is complete, I would expect that we are on the way up and we'll do these breakouts. Now in Bank Nifty, it's lagging behind a little bit. Even though the hourly RMI is in buy mode, we haven't crossed the averages. So where is the 40-hour average for this? It is at around 45,670. Going above that is important to get that pace and momentum. And once we do, here there is no channel, right? So it is an ABC decline here also, but there is no channel here to really hold prices. So whatever it is will be back to the highs, or if you want an interim resistance, you can actually use a retracement tool. 61% of the retracement coming at around 45,940 would be the immediate resistance. And after that, usually you think that any counter trend move is over, and in the big picture, as we've explained, we do think this is a 1, 2, 3, 4 and 5. And with that complete, you've pulled back and you start another 1, 2, 3, 4, 5. Now tomorrow we can also think, no, this is 1 of 5 as we had earlier thought. That count is not wrong. Both are alternates. We will stick with this because it aligns with what we are probably trying to see in Nifty in terms of pullback. But it can change later on as the structure develops. Basically, what you want end of the day is either 5 waves or you want it to go into 9 waves, right? Even if I take this as a larger one, you will get 3, 4 and 5 of a larger degree, which is again 9 waves. And if you do 1, 2, 1, 2, 3, 4, 3, 4, again you will get 9 waves. So basically, that doesn't change. We can always find 2 ways, but this is the easy way right now to just do 1 and 2 and continue. That also ends up giving us different levels, and we can overall project, if this is a larger 1 and a 2, then where will 3 be equal to 1? Then we can actually do some calculation. Or we can do shorter cycles, like we can think, okay, this is 1 and 2, and then what is 3? So you can have 2 different numbers based on the degree of move that you're really thinking about. Mid and small cap indices have done well. The mid cap index and small cap both taken 40-hour average support and moved up. So looks like that rally is simply extending. In fact, mid cap did that 2 days ago, and small cap took a little while longer to complete its cycle and then joined in. Both have done so and are extending. So they are both in, if you look at the daily RSI, you will find both in overbought territory but extending. And so they are not in extreme overbought, but they are above 70. So these are one of those strong continuation rallies where RSI remains above 70 and market keeps going on. So what you'll have to keep looking at is the structure and the count rather than that RSI. You cannot go, look at RSI and trade this market. You'll miss out. The biggest gaining sectors, of course, PSE remains the surprise winner. It's not a surprise to me, but surprise in the sense that yeah, it slowly picked up and now it's going ballistic. It's not pulling back like from the bands like it did here and here. Even the RMI has crossed this entire previous range where it has always halted. So in that sense, it is surprised that it has picked up super speed here as people are buying into this sector's theme, which I explained in a lot of detail, I think, in the long short webinar also. Why PSU, how their earnings grow in the larger GDP cycle. I think even in my YouTube videos I've explained it. So that is sort of, if the way prices are moving, I think that's what the market is discounting. I cannot think of any other logic. And the other big one joining in is metals, the second major gainer for the day. And the metal index should very quickly move towards the highs before it pauses. It should surpass, because when you do so much basing at the bottom, a lot of accumulation happens down there. Even if you use the BSE metal index, which is what I like to look at, this basing that it has done here, a lot of stocks have done. If you look at individual stocks, now when they start taking off, they very quickly want to get past this high, and then only have the next pause or consolidation. So that is what I would think will happen in August. It will, make that meaningful rally. The RMI will do a full, extended cycle. It has taken support here on the 20-40 average, again here on the 20-day average, and is extending. And we have to complete multiple 1, 2, 1, 2, 3, 4. So quite a way to go. Even within this, from this low point, 1, 2, 3 is going on. And from this low point, it will be like larger one. But again, this year, I think the third is short. So actually, there are multiple 1, 2s. A lot of legs to complete. And the RMI is in buy now. This will go into a larger extended cycle here and then only come back. The major gaining, losing sector, though, on the other side is just FMCG. Pharma's flat. And FMCG is just consolidating, not rallying right now, because it had a pretty good rally from March. Possibly it just pauses now and consolidates while others are catching up. And the third gainer here is energy. Energy is of course driven again by the metal commodity cycle, because commodity prices going up means oil goes up, and then that ends up driving the energy stocks as well. Now, are we seeing that across in stocks? Just take in the readings today, just taking a quick cross look at the global readings. Aluminium prices marginally up, not really much happening here. Not much happening in oil. Copper, not at least in the morning. Copper did bump up to a new high, but sold off from there. I think most of the real movement and all this happens in the evening session after 6, 7. But sometimes you do get a move in the day which you can read into. But sometimes the early morning move just gives up because of little trading, and then the real thing only happens after the evening. So that's something we'll continue to watch out for. In fact, even the DXY, it's just below the 40-day. I want to actually see that down move start. But various other markets are probably leading the way or showing other signs, like Japan, for example. After this long consolidation, it kept hitting the 40-day average, and today it gapped up and opened much higher. Possibly this consolidation or basing is over, and the next move higher, which is in this case, as I've marked it, 1, 2, 3, 4, fifth of third maybe ready to form. And this of course this count here has to change. This has to become a larger 1 and 2, and so we'll be completing 3 after this rally, and then a 4th and a 5th overall in the overall rally for Japan. And the other big one which you need to keep an eye on, which I'm doing every day, is of course China. This is the EM index. Somebody asked me in the comments. I've not posted the chart. It's very similar to what we've already written about it. The only thing I'm trying to think about here is this rise was 3 waves. So possibly this entire structure is a running 2 from here to here, and then 3 starting. Here it's very clearly making high rise and breaking out. And we're getting very close to this wave 1 top. So the third wave in the emerging market index, once it gets past this, goes straight to these highs. Should be a pretty smooth move. And this you should see then across Asia taking off. So when you actually look at the emerging market indices, you can see that strength. You can see it in Brazil, you can see it in Russia. Here on the right, it has been pretty one way, although Russia is no more in the EM index. Brazil has done that. Brazil has broken out of its congestion of 2021 and started making higher highs. Australia is the only one which has not done that, which is driven significantly by the commodity cycle, and therefore now is the time that Australia also starts to participate in that move. And lastly, if we just look at Asia, Asia has been the one that has held up the best. And many of them have started to break out. Like Thailand had written about last week, it's breaking out of this, last channel down here of the bottoms, highs and lows of here. And so this is a sign that the decline is over. Something which we've already seen in China here on the left, okay, which broke out on Friday. Today it's had a big swing up and down, but we are out of the falling channel, which simply means the third has started. Whatever it does for a day doesn't matter in the big picture. And similarly, Taiwan, which broke out of this 1, 2, it's starting to start 3. And Jakarta is the other one which has made a third attempt to break out. Remember earlier we thought it would break out from this falling trend line. It did for a while, then it gave back. Now again, this is a secondary trend line we are drawing. When you draw lines like this, they're called fan lines, if you ever read any technical classic book. So multiple fan lines, 2, 3, once you break 3 fan lines, after that they don't expect more whipsaws, typically not. So we've done 2 now. And if this one is through, then it should be like other parts of Asia, if it's doing the same thing, then it should be done here in terms of consolidating. So what we have seen in Jakarta is similar to India, right? Not a deep correction, but a long consolidation sideways and then attempting to start a new move on the way up. So you can see that across Asia, what we are seeing in EM, slowly developing. One market at a time has been breaking out of its ranges on the upside. And that's my overall sense of what is going on. So going back to Nifty, essentially, we just watch those hourly cycles, I think, and they should help us trail our way into the next wave towards the 20,600 mark.